Thank you very much for joining, all of you. We had already a big day yesterday, and today it's only the beginning of the second very hard day of work. So I will begin just by a very simple question. When I launched Paris Fintech Forum 2 years and a half ago, I discussed first with this gentleman, Stefan from AXA at the time, who was creating KAMET, and he told me, "What are you doing? No Insurtech in your event." And so I put him on main stage to explain us why Insurtech will be big. And the reality was that we did a big noise at this time to find fintech. We had only 2 candidates from Insurtech at this time. Then the year after, we did again, and we had like 10, 12. This year, we had like 100. But I must say, only 2 or 3 are really big. Most of the other ones, nobody heard the names, and they are very beginning. So the first question is, Insurtech as a subsector of fintech has received remarkable renown on matching, especially in specialized newspaper or in funding. You will present yourself every time. Okay. Look here. They know who you are. So, and if they don't, I can't help for that. So, can you react the way you want about what do you think about this buzz? Is it just Insurtech hype? Is it more than that? Do you think there is a real future for all these companies, or it's too hard because it seems to be much harder than the classical neobanks and so on in terms of capital and so on, regulation? So please, as you were speaking, you can begin if you want to answer that one.
My name is Scott Walchek. I am the founder and CEO of a company called Trov.
Scott?
We're a company called Trov. We've released on-demand insurance for single items. We enable people to turn on insurance for anything that they own, whenever they want, for whatever duration they need, and they only pay for what they use. And it's all entirely done digital on a smart device. Disruption.
Just
yeah.
KPIs. You just say figures. I mean, how much money did you raise? How much customer do you have just for?
Well, we're a private company, so we don't get to talk about how many customers we have at this date, but I can tell you about how we measure ourselves. We raised about $100 million, all VC-backed, VC and strategic, and in 4 different rounds. We've launched in Australia, the United Kingdom. We're about to launch in the United States, Japan, and Canada. We actually measure our success in a unique metric called a protected day. A protected day is a customer protecting a thing for a day or a fraction thereof. We don't even consider it a policy because, frankly, people can turn on and turn off, and we measure risk and price risk to the second, which has all kinds of interesting implications outside of just protecting the things you care about. And this year we will eclipse 1 million protected days with the goal of hitting about 3 million protected days this year. We're growing protected days. It's a great metric for us, kind of like Airbnb would measure rented nights. We kind of have that same idea. Every day we're increasing the number of protected days. We're increasing the number of protected days per customer. We're increasing the number of protected days per claim, which gives us an interesting measure of the kinds of customers that we are acquiring.
Thank you. So, hype or future for Insurtech?
Well, we think what we're doing, because it's such a unique kind of risk, actually is going to perform much better than other sectors, because on-demand, micro-duration, single item, that corpus of data that supports, or that's a new way to protect, actually has a great deal of application outside of only just protecting things. And we made a recent, quite a large announcement with Waymo, the Alphabet autonomous vehicle operating system. They're actually applying our on-demand micro-duration capability triggered by a machine to the passenger protections within the Waymo autonomous vehicle. So we think there's a great deal of upside ahead for us, maybe equal to the hype, we hope. But I think this is what we believe. We believe, frankly, that the disruption ahead is really when the platforms think WeChat in China, and think of the major Silicon Valley players who have the consumer brand, the consumer ear. We think when Silicon Valley Inc. becomes Silicon Valley Insurance Inc., that's when the disruption actually occurs. And we want to be in that middleware ecosystem.
Daniel?
Good morning.
Same thing, present yourself.
I'm the co-founder and CEO of Lemonade. Lemonade is a young insurance company domiciled in New York and spreading throughout the USA and soon internationally as well. Small team, 60-something employees, raised $180 million from Google and Sequoia and SoftBank and others. And in our first year of operation, we sold policies, homeowners and renters policies to about 100,000 Americans. I think that Insurtech is both hype and a reality. The classic hype cycle, I think you get stuff that is, in the short term, appears to be overinflated, and the old truism that in the 2-year horizon, things tend to underdeliver, in a 10-year horizon, they tend to overdeliver. But maybe I'll zoom out a little bit and share my perspective. I actually think that the insurance industry, the traditional insurance industry, is facing a sea change, and it may not be a sudden one, but I think it will be a fundamental one. The largest players in Europe and in America are the same brands that dominated the landscape a century ago. If you zoom back to the era of the horse-drawn carriage, you'll see the same names, whether it's AXA's predecessor, Allianz, 128 years old, something like that. In the US, in P&C, the average age is well over a century. Nothing wrong with being established and long-standing, but it does beg the question of whether the substrate on which those companies were built is appropriate for the decades ahead. And I think that's an existential question, a long-term question. It took Amazon 20 years to get to where it got to today, and I think you'll see something similar happening with insurance, where insurance at its core is about statistics. It's about predicting risk, which is predicated on the idea that you can get a lot of data, crunch it in a meaningful way, and predict risk. And I think that the architecture of a lot of the traditional insurance companies makes it very difficult for them to collect high quality, highly textured, and big data. Whereas operations like Scott's, where you have a constant interaction of purely digital infrastructure, means that companies like Trov and others, Lemonade, are built on a digital substrate, and then the data is of a different several orders of magnitude more profound. So companies like Lemonade or like Trov start off with a data disadvantage because we haven't got a long history. But I think we're finding already now we're at a tipping point. Certainly in the next 18 months, I think you'll see it tip over, where the young insurtechs have more data, deeper data, more predictive data. And that goes to the very core of what insurance is about. And there are structural reasons that inhibit traditional insurance companies from implementing those same things. So we can develop the theme, but I do think that we can say today that insurance is dominated by the same names 100 years ago. I don't think our kids are going to say that sentence.
Thank you. So we just had the opinion of two direct-to-consumer actors, quite big today. Rohan, you are more behind the curtain. Your customer are the insurance. So what's your opinion about this hype future about the Insurtech model? We'll come back later about more about other questions. And first, of course, present yourself.
Hi, my name is Rohan Malhotra. I run a company called Roadzen. We are a US, China, India company, so we're in 3 of the big markets of the world. What we do is we help insurers do 3 things. We help them underwrite their current kinds of risks and newer products with better data and do it in real time. We help them process claims real time, which is one of the big challenges for them. And the third thing we help them do is provide assistance to their customers. We now work with 27 insurers all over the world. We have about 10 million customers on our platform. And we don't like to talk about the funding we've raised, but let's say we've raised from some good people who believe in our vision and who believe this is going to be a 20-year play. The question about hype or reality, I think it's not really the right question. The question is, are we solving a real problem on this stage? And we didn't start the company because we saw insurance as a sector to be disrupted. My friend had an accident on the road, and it took me 4 hours to arrange a tow truck, to get his car towed to a location, to get his insurance claim filed, and this was in Delhi. And I thought if I needed an Uber right now, it would be here in 2 minutes. If I needed pizza, it would be here in 30 minutes. And right now, I really need help. It's 1:30 a.m., and it's going to take me 4 hours to do this. So I called my partner, Raj, and I said, Raj, I think there's a substantial company to be built here. And so we don't look at hype. I think at some stage, hype matches reality. We look at the problems we are solving. And fundamentally, as Dan said, this insurance company if you were to build it today, it would be built like a technology company, not a company with an IT budget. And we are very keen on transforming insurance using data. So that's kind of the way we look at the world.
Okay, before asking you the same question to Jacques and Stéphane, just one remark. So we have two guys trying to disrupt the direct-to-consumer market and going directly in competition with our friends, and sometimes working with them, but in competition. And you are like at the gold rush, selling the tools to these insurance guys, perhaps to compete with them and to win this new competition. So what is your vision today on that? Do you think perhaps you choose a good model to be your partner to help you stay there for the next century? Or you could be afraid of these two new models that can really compete with, sorry to say, old actors like you are? Perhaps Jack, you want to answer first?
Yes. I think the three of them, they take advantage of our ineffectiveness, globally speaking. So one is clever because he thinks that we have the money to help him and to speed his growth. And the two others, they want to be the David against the Goliath, and they say, okay, we will climb the mountain, okay? But the beginning of the thing is the same story. Insurance is an attractive market in terms of growth, worldwide speaking. Attractive in some line of business, very much attractive, health insurance, for instance. Attractive in some geographical areas where growth is double digit. So from that perspective, you could say, okay, I am an entrepreneur. This field of activity looks like something where I should invest in. Then it's attractive because we are ineffective or considered as being ineffective, and because also